Good day, friends. In our last video, we saw how to prompt for getting insights for a common size balance sheet. In this video, we'll continue to see how to prompt for doing ratio analysis for using 10-year statement. For the purpose of example, I am considering VST Industries balance sheet. Friends, this is only an example. I definitely need an example of some company to show these illustrations. This is not a recommendation, advice, or anything about the company. Please don't make a buy decision based on this video. This is only for academic purposes. Okay. So in the balance sheet, when it comes, there are a lot of what to say sub details. The company has no borrowing, so it is showing zero. Other liabilities has some details like trades payable, etc. Fixed asset, there is a huge breakdown which I'm not interested, so I close it. And other assets again have interesting items like inventories, trades receivable, cash, etc. So this image I make up to March 2024 because September 2024 is still 6 months of the current financial year. I am interested only in full year. So I'm going to consider only these columns, and then let me feed into the model for analysis. And this is the prompt which I'll be giving. Say that it is attached to the 10-year balance sheet. Calculate the below ratios and present and share the output as a table. Okay, so let me go to the model, upload the VSP Industries image, and also I'll copy the prompt, put it, and let us see how the output comes. One interesting fact I want to tell is, see, there is a difference between a conventional calculation. Like if you say current ratio, it's a ratio of current assets by current liabilities. Whereas screener doesn't show the information that way. You will not find any heading called as current assets or current liabilities. So the way the items are grouped are significantly different from what we generally use in the financial or accounting terms for calculation of these ratios. So let us quickly see what the model is doing. So it is extracting. It takes a bit of time because it's a huge image with a lot of data points. So it's going to take a couple of seconds more. So let us wait for it. And one more thing is, there are multiple ways to do this analysis. Just I want to show a simple way how the tool is able to pick up from an image and do all this analysis. You can download this entire Excel. I think a screener has a beautiful feature to download this as Excel, and if you download that Excel also, you can upload. So all these we will explore in the forthcoming videos. So now it has made some calculation. Okay, this I'm not interested, but I want to verify. See, I always tell you to verify the numbers. That is more important. So how I'm going to do is I'm going to ask how did you do the calculation for one of the years and compare the numbers. Please show me the calculation for the year 2024. Okay, let us see. It has to explain me how it has arrived at this number, because we really need to see whether it has considered all the line items correctly. Okay, now we go for the comparison with the image. Current assets 455, 1 minute, 455, 46, 35, 5, 4 and 6. I don't know where this 69 comes from. 69. I'm not sure where this is picking this 69. Okay. Inventories is fine. Cash equivalents 35 is correct. Current liabilities is 468. You can find it here. Then it also shows the calculation. Now it's fine. Current assets, it's all adding all this 958. Liabilities is 468. I only want to understand where did this 69 come from. Okay. 69. Let me check the image again. I don't find any entry of 69 in the current assets. In the current assets formula, what is the number shown as 69? Let us see whether it calculates. Other assets. Other assets just 4 and 6. I don't know where. Okay. I think it has made a mistake. See, if you see, the 69 comes from the entry for March 2023. You are wrong. See, so convincingly, though it's wrong, it's so convincingly telling it's coming from the other assets. Please check for 2024 other assets is 4 and 6, while the 69 is for 2023, which should not be part of this formula. So this is one example where you clearly have a limits that you cannot believe the model full percent. Your own understanding, now it does correctly. Your own understanding, or how do I say, your knowledge, your expert human judgment is very essential. So it is correcting. Okay, now I'm going to tell, please correct, please verify the numbers for all the 10 years and summarize again. Okay, while let it summarize, this is not the key thing which I want to drive. So it is going to summarize for all the years. Fine. Okay, it is showing current assets, current liabilities, all that. See in the below, the bottom where I'm pointing my mouse, you can very clearly say that ChatGPT can make mistakes, check important information. So whenever there's a calculation, please request back the information. How did you calculate that? Uh, that thing will save you a lot of other troubles, like if it has gone wrong in the calculation. Particularly here, it is bound to happen because in the image there is no pointed current set current liability description. So it is quite possible that model can mistake. We cannot blame the model. Model can mistake. Okay. Now what I'm telling is the key or the essence of inferences. We are no, this calculation is fine. What do you infer from this calculation? So please analyze the table that you created in step 3 and provide detailed inferences of the ratios. This is the most important or the valuable thing which I'm focused at. From a 10-year balance sheet perspective, I'm doing a ratio analysis and seeing how the trend looks like. So that's what is going to come out. So before that, you need to validate the output once and then see here you see for each numbers current ratio analysis, what is the trend observation and what it is inferring. For last 2 years, there is a sharp rise. Current ratio should be 2, but it is less. Then trend observation of a quick ratio. Then there's a sudden jump in 2024. So it gives a very detailed split up for each of the ratio analysis, and finally gives a detailed inferences like no interest burden, good, less financial risk because the company doesn't have any debt. It has zero debt for all the years. So then it says it could indicate underutilization of financial leverage. So the company is not borrowing and making financial leverage. So it is putting all the pros and cons and finally a summary in the table. So this is a very good kind of inferences for a 10-year balance sheet ratio analysis, which you can get in a few seconds. But always, friends, check the calculation. It is a bit difficult to believe the numbers because here you saw very confidently it was telling that it is the other ratio which I have brought in. Very confidently it was telling that the 69 is part of other asset items. Only after I pointed out saying that it is part of 2023, then it says you are correct and then recalculated. So that is the moral. So in the next video, we will move to the inferences from the entire balance sheet. We are not focused on common size or the ratios, but in general, what does the entire balance sheet has got to say? Okay. Bye till then. Thank you very much.